Hey everyone, Emily Carter here. Today we're diving into one of the most explosive AI winners of 2025, Micron Technology, ticker MU. You've probably heard all the buzz about Nvidia's GPUs powering the AI revolution. Well, Micron provides something equally essential. Their memory chips are what keep AI models working at full speed. And demand is so intense that their high bandwidth memory, HBM, is already sold out through 2026. So let's explore why Wall Street suddenly can't get enough of Micron, and whether the stock still has room to run. Micron is the only major US manufacturer specializing in advanced memory like DRAM, NAND, and HBM. If the AI chip is a brain, memory is the short-term thinking space that keeps everything moving. The more powerful the AI system, the more memory it needs, and AI workloads are growing exponentially. This has completely reshaped Micron's business, turning it from a cyclical commodity player into a must-have supplier for the data center AI boom. In their most recent quarter, Micron generated nearly $2 billion from HBM alone. That's almost $8 billion per year from a product category that barely existed for them a few years ago. And because pricing agreements with major customers are being locked in ahead of time, Micron now has something rare in the memory industry: visibility. Their gross margins have surged above 50% for the first time since 2018. And they expect that strength to continue into next year as AI demand ramps even further. But there's a twist. Micron has been forced to stop supplying server memory to Chinese data centers because of government restrictions. That means a 12% hit to total revenue. At the same time, Chinese competitors are trying to catch up fast. However, global supply remains extremely tight. Manufacturers are shifting all capacity toward high bandwidth memory, leaving a shortage in traditional products. That imbalance has sent prices sharply higher. For now, scarcity is Micron's best friend. And there's a national strategy behind all of this. Micron is building a $100 billion semiconductor megafab in New York, one of the largest private investments in U.S. history. The goal is to secure the future of advanced chip manufacturing on American soil. Micron aims to produce one in every 4 U.S.-made semiconductors by the end of the decade. And as geopolitical tensions rise, that makes Micron an even more valuable partner for major AI companies. So what about the stock? Micron shares are up nearly 200% in just 6 months. It's been an incredible run. But here's what's surprising. Even after this surge, the valuation still looks reasonable. Forward earnings multiples remain near 12 times, and analysts expect earnings to keep climbing as AI investment accelerates. In the short term, the stock might take a breather. In the long term, the memory cycle tied to artificial intelligence is only beginning. We do need to acknowledge the risks. Micron operates in a historically boom and bust industry. The company is pouring billions into new manufacturing lines. If demand slows, or if supply overwhelms the market, profitability could compress again. The stock is also in technically overbought territory. So yes, volatility is part of the package. But right now, this is very much the boom side of that cycle. Here's my take. Micron has finally found its moment. AI turned memory into a premium product again. Sales are strong, pricing is strong, and the company has strategically positioned itself as a leader in the technologies that matter most for next-generation compute. If you believe AI continues to accelerate, from data centers to autonomous vehicles, Micron is one of the key enablers making that future possible. What do you think? Is Micron a buy here, or would you wait for any pullbacks? Let me know in the comments. And if you enjoyed this breakdown, don't forget to like the video and subscribe.